Okay, so which problem we completed yesterday? Problem number 18. Do you understand how to calculate here net proceeds? Clear? Completed entire problem? Illustration number 19. One minute. See here. The company proposes to issue 11 years, 15% debentures. They decided at that agreement, they decided what the rate? 15% for how many years? 11 years. So this is a pre-tax KD. Are you agree? Pre-tax KD. Yes or no? No. Now this is a n number of years. Okay, then fine. Debentures, but the yield on debenture of similar maturity and risk class is 16%. So in outside there is a similar kind of debenture. They are earning 16% per debenture, but we are issuing 15% debentures. Are you clear? Now the point you have to understand, 15% debenture is there, 16% debenture is there in the market. As an investor, what you will choose? 16% debenture. But for this company, money is needed. But they are decided they need to give 15% only. They need to give what ma? 15%. At that time, what is the possibility we have means we have to issue at discount. We have to issue at discount. Nana, clear Nana? Now when it come to, so how much interest we are paying? 15 rupees per debenture. 15% on face value means 15 rupees only. Now I want this value. Interest is 15 rupees. For on which value I am paying means we are not paying on face value, we are paying an issue price, right? Now the issue price purpose only we are using a concept of capitalization. If you divided with a percentage, you will get capital value. So which percentage of value you needed? 16% of value you needed. That's why I am dividing 0.16. How much? 93 point. For 93.75 also they are not purchasing. We are issuing a discount only, even though they are not purchasing. That's why we are using flotation cost. 2% of face value. Why? Because we are issuing a discount now. Discount value is lesser than the face value. That's why I am applying this 2% on face value. That is nothing but 100. If you apply on 100, 2 rupees. Now I am selling issue at 93.75. No one is ready to buy. That's why I am appointed underwriter. For him, I need to pay 2 rupees per debenture. Now net consideration I received 91.75 rupees. That is nothing but net proceeds calculation. Clear, sir? Any doubt on this? Sure? Okay, then fine. Illustration number 19. Illustration number 19. The capital structure and other information of a company are given as follows. Equity shares, reserves and surpluses, debenture. 100 lakh, 50 lakh, 200 lakh. Can I name this called book value? Okay, then fine. KE they already given in the question paper directly, 14%. See, after tax cost of capitals. Are you okay now? Now they not provided KR, they not provided KD. We have to figure out these two missing figures. Are clear, sir? Okay, then fine. The market value of equity share is rupees 300 per share. The company issues market value of weights for the computing average cost of capital. Are you guys clear? Here don't take book values, consider what values, Nana? Market values, that's the point. Are you clear, sir? Okay, then fine. Corporate tax rate is 40%, where the average cost of capital is can I name it is called KO? If you want to find out these missing figures, I want total. So generally, previous problems we are calculating this KO, but in this question they provided KO directly. Now what is our figure outing points? KR as well as KD. Okay, then fine. What is the cost of reserves and surpluses and the cost of debt before tax? Here what you will get an answer. After tax you will get an answer. Why? Because after tax calculation. So if you add that tax percentage once again, you will get a pre-tax KD. Sir, clear, sir? Out of interest, if you remove 1 minus tax, you will get what? Post-tax KD. If you add this tax to this interest, what you will get? Pre-tax KD. Guys, clear? Okay, then fine. Now, for KR calculation, what are the conceptual knowledge you have, Nana? For KR. If there is a flotation cost and personal tax, K is not equals to KR. If there is a no flotation cost and personal tax, K is nothing but, is any flotation cost and personal tax? Now I know KR. Are you guys clear? Now what is the missing figure we have? KD. Now we can easily figure out with the statement. The entire statement will be filled except this one. Are you guys clear? By using this total 10%, this is a question mark I can figure out. Are you okay now? Sir, if there is a flotation cost at that time, you have to figure out the KR. If there is a personal tax, at that time also you have to figure out KR. Guys, clear? Any doubt on this? Sure. Now what values they said, Nana? Market values, but they considered book values only. It's the wrong answer. Now, please rectify here. Why? Because market price is given, na? What about the equity market price? 300 per share. How many shares? 100 lakhs divided by 100 rupees each. You will get number of shares. That is only logic, na? Amount of capital divided by one share value. You will get how many? What is the answer? Number of shares. Now number of shares, please. Simple here. Divided with 100, multiply with 300. You will get answer. Divided with 100, you will get number of shares. Multiply with market price, you will get market value. 100 divided by 100 into 300. 300 lakhs only, no? 300 lakhs. Now, there is a no specification related to the wait. Now, this 300 lakh is known as what? Market value of equity share capital or equity? I need to use the concept of splitter. Now please split it. 300 lakhs into 100 divided by 150. Yeah? How much, Nana? 200 lakhs. 300 lakhs into 50 divided by 150. Yeah? 100 lakhs. Now there is a no discussion relating to debentures. There is a no market price relating to that. That's why book value is nothing but market value. Don't skip the elements. If there is a no book value, there is a no market price represent, book value is nothing but market value. You have to consider all capitals. 200 lakhs, huh? Now what about the total? This is a way to write, sir, but they're wrongly written. Are you guys clear? Now please tell me the weights, Nana. Weights I think correct only, na? 200 divided by 500, 0.4. 100 divided by 500, 0.2. 200 divided by 500, 0.4. Hope you guys clear? Now weights is there. Specific cost of capitals already provided. KE provided. How much is the KE? 0. Okay. Here they provided in percentage format, but we are using 0.14 rate we are using. Okay. What about the KR? Because of there is a no flotation cost on personal tax, there is a concept of K is nothing but KR, 0.14. Now I don't know KD. That's why I'm assuming it is an X. Are you guys clear? Now if you multiply with weights into specific cost of capital, you will get a product. Now please tell me the product. 0.056, 0.028, 0.4x, 0.04x, 0.4x. K was also given in the question paper, na? How much? 0.1. Now see the common sense. 0.056 plus 0.028 plus 0.4x equals to 0.1. Sum of all product is nothing but K1, na? Yes or no, sir? Now sum these two. 0.084 plus 0.4x equals to 0.1. Send this 0.084 into that side. Now 0.4x equals to 0.1 minus. This plus will be act as a minus, na? Minus 0.084. 0.016 divided by 0.4. If you send this 0.4 into that side, x equals to 4%. Now post tax or pre-tax, Nana? Post tax or pre-tax? Post tax. I want pre-tax. How to calculate pre-tax? Just a basic thing. Now tax equal to how much? Tax equal to how much? See the logic. 40%. Pre-tax equals to 100%. Pre-tax equals to 100%. Tax is 40%. What about the post-tax? Now the common sense. This 60% equivalent to 4%. Now what is requirement? 100%, na? For 100%, how much? 6 point? Completed. Here any confusion, sir? Pre-tax is nothing but 100% interest rate. On that you are removing tax. What you will get? Post-tax. That only I said. Interest 1 minus tax, that is nothing but 0.3 means I consider directly I into 0.7. Now the interest is equal to what, na? 0.7. That is nothing but post-tax. What about the pre-tax? Interest equal to 1, na? Guys, clear? Any doubt on this? Sure. Now please present this in your material notes. Do you understand the concept of split, ma? Now generally, wait a minute, Nana. In theory material, you can start, Nana. I will explain. 1 minute, stop writing, Nana. Now see this one. Weighted average cost of capital. Weights are derived from book value of the different sources of finance as per book values of accounts. Are you agree for this point? There is nothing but book value point of view, KO. Next, retained earnings to be included. That means you can show equity share capital amount as per book value, retained earnings amount as per book value. There is no concept of split as per book value. Yes or no? Okay, then fine. Take a proportion of total values as per book value of accounts. You will get weights. Are you agree? Now come to these points, Nana. Read this one. Weights are derived from book value of different sources of finance as per prevailing market rate. Now that is nothing but number of shares into market price. Then what you will get? Market values. Market values. Now retained earnings. What, Nana? What is the mean for ignored? Need not to consider. Need not to consider. Yes, you need not to consider separately. Why? Because number of shares into market price is nothing but what, Nana? Market value of equity. It already included. If you want, you show as a separately with the concept of split. If you don't want, go with the just market value of equity. Are you okay? Now the point is, if KE equals to KR, split is not required, Nana. If KE is not equals to KR, at that time split mandatory. Okay? But that's the purpose. If it is a KE equal to KR, KE not equal to KR, what I said? Go with the split. అంత నేర్చుకోవాల్సిన అవసరం లేదు. అక్కడ ఏం చెప్తున్నాడంటే KE ఈక్వల్ టు KR ఉన్నప్పుడు స్ప్లిట్ చేసిన ఒకే ఆన్సర్ ఉంటుంది, స్ప్లిట్ చేయకపోయిన ఒకే ఆన్సర్ ఉంటుంది. ఓకే, స్ప్లిట్ చేసిన ఒకే ఆన్సర్, స్ప్లిట్ చేయకపోయిన ఒకే ఆన్సర్. బట్ వెన్ కమ్ టు ద KE నాట్ ఈక్వల్ టు KR, స్ప్లిట్ చేయకపోతే తప్పు, స్ప్లిట్ చేస్తే కరెక్ట్. బట్ వెన్ కమ్ టు ద KE ఈక్వల్ టు KR రెండు కరెక్టే కదా. కాబట్టి స్ప్లిట్ ఈస్ ద మెయిన్ అజెండా ఫర్ అస్. That's why I said if it is a KE equal to KR, KE not equal to KR, don't think all those things. If it is a market value of equity, you have to split into market value of equity, share capital, retained earnings. In book value only, there is a no retained earnings. At that time, there is a no concept of split for us. మనకి తెలిసిన స్ప్లిట్ ఏంటంటే అక్కడ నీకు క్వశ్చన్లో రిటర్న్ ఎర్నింగ్స్ ఉంది అంటే మార్కెట్ వాల్యూ అప్పుడు ఈక్విటీ షేర్ క్యాపిటల్ని సెపరేట్గా, రిటర్న్ ఎర్నింగ్స్ని సెపరేట్గా చూపిస్తాం. లేదు బుక్ వాల్యూలో రిటర్న్ ఎర్నింగ్సే లేదనుకో, అప్పుడు మార్కెట్ వాల్యూ ఆఫ్ స్ప్లిట్ అవసరం లేదు, డైరెక్ట్గా మార్కెట్ వాల్యూ ఆఫ్ ఈక్విటీ అని రాసేస్తాం. క్లియర్ సార్? I will give clarity also why K equal to KR at the time both are same answers. K not equal to KR split is a correct answer. I will explain. But that are the trash concepts. Are you okay? But ultimate thing is split. Split when? Market value point of view, book value point of view. Market value point of view only. Are you guys clear now? Okay, then fine. Speed up this one. Started already? Started, huh? So I will give clarity for the split concept also. Wait a minute. Open illustration number 16. In your notes, illustration number 16, 1-6. Okay, so split concept arises where market value point of view only now. Okay, now when it comes to the market value point of view, KE KR both are same, huh? As per illustration 16, KE KR both are same only now. Yes or no, sir? Okay, now see, instead of Split. Generally, I think I explained split concept. Instead of split, I am showing directly one heading called equity heading. Now equity amount how much? 250 lakhs. 250 lakhs. What happened? Weights. This will be summa. Why? Because there is a no concept of equity share capital, there is a no concept of retained earnings. మొత్తం కలిపి ఈక్విటీగా చూపించేస్తున్నా. అప్పుడు వెయిట్ ఏమవుతుంది నీకు? 250 డివైడ్ బై 420.5 అవుతుంది. ఎంత వెయిట్? 0. If you wait a minute, sir. Wait a minute. That's a point. Now okay, see here. So instead of equity share capital and retained earnings, I am using a concept of equity. Okay, that's why I am need not to express two rates. Only one rate is sufficient, 0.16. Why? Because for equity 16% only, for retained earnings also 16%. Okay, then fine. I need not to explain two values. I just go with the 250 lakhs. 250 lakhs. Now weights also changes now. What about the weights? 0.5945. Okay, and I am also need not to write two market value products. I can use only one market value product. 16% into 0.5945. How much? 0.51. Sum all this now. KO. Any change in the KO? Any change in KO? Market value of product sum now. 0.0951 plus 0.0032 plus 0.0136 plus 0.0166. 0.1285. Any change in the answer? Any change in the answer? If split, you will get a same answer. If you are not split, you will get a same answer. Guys, clear? Yes or no, sir? Sir, nothing, sir. Basic max happens, sir. Instead of 2, you will get a 2 summations here. If you add weight of weight of equity share capital, weight of retained earnings, the answer is 0.5945. Are you okay? The common is 0.16 for 2. That's why I taken a common. Into that weight, I got a total weight of equity. Clear? Okay, then fine. I hope you understand split if K equals to KR. For example, here 0.154. 0.154. Can I take these two are common? Can I take these two are common? That's why if KE not equals to KR, you have to split mandatory. Sir, clear, sir? So, but ultimate conclusion in my point of view, it is K equal to KR or KE not equal to KR. We will do split. We will do split. Hope you guys clear? Forget about the what I explained now. Just for clarification purpose only I explained. So my point of view, market value equity, we need to split into market value of equity share capital, market value of retained earnings, if there is a retained earnings concept. Hope you guys clear? Are you clear now? Then fine. Now solve problem number. The problem number, Nana. What you are computing? For which limited? Just stop here. Oh, what is the clue they said? As per book value or as per market value? So market value means one point you have to keep in our mind. If it is an equity, you have to split into equity share capital and return earnings. Weights. What next? Specific cost of capital. Next, product. Equity share capital, retained earnings. You have to do working note for this. What percentage of debenture it is? We don't know. That percentage only we have to figure out. Debenture. Now we will do working note later. We already know the values now. $200 lakhs, huh? Here 100 lakhs, huh? Here 200 lakhs. Total 500 lakhs. Weights please. 0.40, 0.20, 0.40. Specific cost of capital already 0.14, 0.14. Put a star here. You have to write a assumption. So here I am assuming there is a no post-tax KD X. Now please tell me the product, Nana. 0.4 into 0.14. 0.056. What about here? 0.28. Here 0.4x. So that is nothing but K also given in the question paper 0.1. Calculating X. Calculating cost of post-tax debt. Debenture X. So 0.056 into, sorry, not into plus now. 0.028 plus 0.4x equals to 0.1. Now 0.4x equals to 0.1 minus, how much this two summation? 0.084. Now x equals to, what about this? 0.02, 0.016 divided by 0.4. 0.04 or 4%. Clear? pre-tax KD. That is nothing but interest, huh? Yes or no, sir? Now, how I calculate, sir? 4% is equivalent to 4% is equivalent to 1 minus tax, huh? Yes or no? What you want? 1 you want. Now 1 divided by 1 minus tax, please. 1 minus 0.04. 0.4, huh? Now the answer? 6 point. Are you guys clear? For our, I will give alternative also. I equals to 100% minus tax. That equal to how much percentage? 40%. If you remove tax, you will get a post-tax interest. That equal to 60%. With this logic also you can calculate. I equals to 4% into what your requirement, 100%, it equivalent to 60%. 6.67%. Two alternatives. You can choose what you want. Are you okay? Now you have to write working notes, na? What about the working note? Market value of equity share capital equals to market value of equity into book value of equity share capital divided by book value of equity. Yeah? Now what is the market value of equity? 100 lakhs divided by 100 rupees into 300 rupees. You will get market value. Into what about the book value of equity share capital? 100 lakhs. Huh? What about the book value of equity? 100 lakhs plus 50 lakhs, 150 lakhs. Huh? Now the answer 200 lakhs. Huh? Now market value of retained earnings, I already said. Market value of equity minus market value of equity share capital. Now market value of equity 300 lakhs, on that equity share capital value 200 lakhs. Retained earnings value 100 lakhs. This is a working note for. Sir, clear, sir? So what is the mean for 100 lakh divided by 100? Number of shares. Now thus 300 rupees is nothing but market price. If you learn these micro things, you can get a clarity, Nana. So what student feel means cost of capital means they will ask KO. This is a statement. That's only he knows. These micro things he will forget. Are you okay? So you need to calculate step by step. What I am calculating? What is the requirement? If you plan like this, you will get a subject. Up or down? So if they ask any kind of question, you can answer, na? Nothing new points is there in this entire problems. All problems I teach, Nana. For every problem, they will ask this kind of different adjustments we have to do. For learning purpose, anything is there here? That is a common sense we are applying. Are you okay? So I think in group 1 I explained sales minus variable cost, you will get contribution. If you know contribution amount and percentage, you can easily figure out variable cost rupees as well as sales rupees. Are you okay? The same logic applicable to PBT minus tax PAT. Tax percentage you have to apply only on PBT. It means PBT always equivalent to 100%. On the tax rate 40% means if you remove 40% you will get 60%. That is called PAT. If you know PAT amount and PAT percentage, you can easily find out tax and tax amount and PBT and PBT amount. Clear? If you know the tax percentage and tax value, same logic. You can figure out PBT, you can figure out PAT. If you know PBT and PBT percentage, you can easily figure out tax value and wrong answer. How you find out? PBT always 100%. You can't figure out. With help of these two only you can figure out above value. అది 100% దాని వాల్యూ ఇచ్చాడు నాన్న, ఇంకా 100% మళ్ళీ మల్టిప్లై చేస్తావా? క్లియరా? ట్యాక్స్ పర్సంటేజ్ ట్యాక్స్ వాల్యూ తెలిస్తేనే పీబీటీ పిఏటీ ఫైండ్ అవుట్ చేయొచ్చు. పిఏటీ అండ్ పిఏటీ పర్సంటేజ్ తెలిస్తే ట్యాక్స్ వాల్యూ పీబీటీ ఫైండ్ అవుట్ చేయొచ్చు. పీబీటీతో ఏం చేయలేం. దట్స్ వై సేల్స్ ఈజ్ నాట్ టూల్ ఫర్ క్యాలిక్యులేషన్. సేమ్ లాజిక్ ఫర్ సేల్స్ ఆల్సోనా? ఆర్ యూ ఓకే? కంప్లీట్ అన్నా? Write down the note point, Hannah. What is the note point? If there is a no flotation cost on personal tax, if there is a no flotation cost on personal tax, if there is a no flotation cost on personal tax, K is nothing but KR. K is nothing but KR. K is nothing but KR. That is K equal to KR equals to 14%. That is K equals to KR equals to 14%. Sir, clear, sir? Illustration number 20, sir. Illustration number 20. So here December 23 MTP question this is. Read question properly. No daily classes YouTube lo. Up to 23 only I will discuss, Nana. 24 to 28 additional questions for self-practice purpose. You can observe the heading is there, I think. Additional questions. 24 to 28. So what is the requirement? Undoubtedly KO. Yes or no, sir? On which basis? Any specification? Top of the question itself, this says calculate the weighted average cost of capital using book value weights and market value weights based on the following information. Now that 8 lakh, 2 lakh, 10 lakh is which values? Book values. How you get the market values? Number of shares into market price. Number of debentures into market price. Number of preference shares into. How to calculate number of equity shares? How to calculate number of equity shares? Amount of equity share, book value of equity share capital divided by 1 share value. That is nothing about 10 rupees. Now 20 lakhs divided by 10. 10 lakh divided by 10. 1 lakh shares into what about the market price? 22 rupees, huh? 22 rupees. I think here is there. Equity share equals to 22 per share. Are you okay? In books they recorded 10 rupees, but when come to the market, the value is 22 rupees. Next, how to calculate number of preference shares? Amount of book value divided by 1 share value. 2 lakh divided by 100, 2000 shares, 2000 preference shares. What about the market price? 120 rupees. Sir, my question, preference share 100 rupees per share given in the question paper, na? For example, they not provided 100 rupees. At that time, they just said preference shares 2 lakh rupees. At that time, assumption face value equals to 100 rupees. If you want to take an assumption for equity share, prefer 10 rupees. If you want to take 99%, they will give book value of equity share capital. They will miss this only. Preference shares and debenture. When it comes to the preference shares and debentures point of view, 100 rupees. Consider this. Consider this market prices. What is the near value? 100 only, no? What about here? 100. What about the 22 near value? 100. There is a logical assumptions you have to take, Nana. Logical assumptions. Are you okay? So they will give clue any place of the question. Based on that clue only you have to take an assumption. Are you okay? Sir, assumption this coach kadani, can I take 1000 rupees per debenture? It depends upon the value of a market. If market price is 970 rupees of a debenture, at that time, don't take 500, take 1000. Sir, book value is 1000, market price is 970. Yes, discounted. Yes or no, sir? Now the market price is 1120, 1200. What about the face value? 1100 kada? 1100 kada? You can take what are the assumption you want, but the logical assumption is 1000. Sir, clear, sir? So external financing opportunities, that is nothing but agreement terms. Let us see the agreement terms. 100 per debenture. What, Nana? Redeemable debenture, sir. Write down the formula, dump the information. What is the requirement? Interest I want. Where is the interest rate? Here. 13% coupon rate. Next, tax rate I want. 50%. Repayment value I want. Redeemable means repayment only, na? Repayment at, that is nothing but 100 rupees, sir. Next, I want net proceeds, sir. Market price. I sold for 110, but I am not receiving 110. The reason? Are you guys clear? Now they said 4% flotation cost and sale price is 100. Are you okay? Then fine. When it comes to the preference shares, this also be redeemable only. I want preference dividend percentage 14%. Yes or no, sir? Next, I want repayment value. Repayment at par 100 rupees only, na? N number of years 10. What about the net proceeds or market price? So they said 5% of sale price is a flotation cost. Market price is there. Okay, speed up. So one point I want to understand, What the sentence? Read once again. Point A. From 4% onwards. 4% flotation cost and the sale price is 100. Can I name it? Is called issue price. Face value. Face value or issue price? I sold means what, Nana? Issue price. If you treat them as a face value, we will do mistake. We will remove that 4% on 100 rupees on a market price. Even though there is a market price, I am not selling at a market price. I clearly mentioned I sold for 100 rupees. Here, instead of market price minus flotation cost, you have to use issue price minus flotation cost. What is the issue price? 100 rupees. On that 100 rupees, you have to pay 4% of flotation cost. What about the amount you received because of sale of preference shares? 100 rupees I sold, 4 rupees I need to, 100 rupees I sold, 5% I need to pay. I receive only 95 rupees. Can I name it? Is called net proceeds? Yes. When it comes to the debenture, I sold in the market 100 rupees. No one is ready to purchase. I appointed an underwriter. I paid 4%. I netly received 96 rupees. So instead of market price minus flotation cost, what we want to use, sir? What we want to use? Net proceeds. Are you okay? But when come to the board book, Nana, when it come to the board book, one note point mentioned clearly, when it come to the debenture point of view, if they give market price and net proceeds, you have to consider market price, the point they clearly mentioned. But this solution also, they are all, the ICMA only provided. Here net proceeds information of debenture is there, market price of debenture is also there. Clear? Point to be understand. So as per their assumption, as per their note point, what I need to consider? Market price I need to consider. But as per solution, go and check what they considered, Nana. Net proceeds only they considered. KD. Net proceeds only they consider. What we want to follow means, it is a December 23 MDB question paper question. That's why we have to follow this logic only. Are you okay? They clearly mentioned, I sold one debenture for 100 rupees. Are you guys clear now? Even though there is a market price. Sir, at the time, what way of positive thinking is that market prices are provided for the purpose of market value calculation, not for the cost of debt calculation, cost of preference calculation. Clear now? Yes or no, sir? Then fine. First I want, sir, here split concept is needed. Split is needed. In market value point of view also not needed. Why? There is no rate earnings. Happy question. I want KE first. I want KE first. Please calculate KE. KD, okay, no problem. First to do the specific cost of capitals as a working notes. You can calculate KD, KP, KE, whatever you want. What about the D1? D1 or D0? They said, equity share 2 per share flotation cost and the sale price is 22. How much net received? Net amount received as per equity shares. 22 rupees market price, they sold for 22. They received 20 rupees only. The reason 2 rupees flotation cost is there. What about the dividend? The expected and equity share at the end of the year is 2 rupees. Can I name it? Is called D1 or D0? D1. Growth rate? Completed. 2 divided by 20 plus 7, 0.7 plus 0.07. You can observe then clearly mentioned they are selling at market price of 22. Out of the 2 rupees you have to pay as a flotation cost. The same logic for above A point, B point also. What about the KE guys? 0 point. చాలా కరెక్ట్గా చేశారా? చాలా కరెక్ట్గా చేశారన్నారా? పర్ఫెక్ట్గా వచ్చింది 17%. కేడి 7.04%. Anyone KP? Sir, you want to solve all, sir. First చేసిన వాళ్ళు ఫస్ట్ ఆన్సర్ చేస్తారు అంతే. You have to check that answer is right or wrong. But KE is right for all. What about the KP, anyone? Don't follow the material. They used a formula 1 plus dt. What's the full form for dt? Dividend distribution tax. Formula purpose only they consider. There is no information in the question. I hope you know how to calculate if there is a dividend distribution tax. Yes or no, sir? Don't confuse based on the textbook formula. So even though there is a market price, here we are considering net proceeds only now. Why? Because their sale, they clearly mentioned I sold one share for 100 rupees. Clear, sir? If there is a no clarity at that time, what I felt, sir, I am selling my preference shares at market price. I am selling my debentures at market price. KB, sir. What about the preference dividend percentage? 14 rupees, huh? Yes or no? Plus repayment at para 100 rupees. Net proceeds, they're sold at 100. They received they need to pay flotation cost 5% on face value. 95 I received net. How many years, Nana? 100 plus 95 divided by 2. Now what about this 100 minus 95 divided by 10? 0.05 or 0.5? 0.5 divided by average 97.5. 14.5 divided by 97.5 into 100. 14.87%. Why this much of time you are taking, man? 14.87%. Completed. Are you okay? Then go with the formats. What's the format? Now tell me, guys, individual format is sufficient or a single format is sufficient? Single format is sufficient. We can save time. Are you okay? Source is a common. Specific cost of capital is common. Book values, book value weights. Yes or no, sir? Market value weights. Book value product, market value product. In single format, you can finish both KOs. Illustration number 16, we solved like that only, sir. Madhulika, individual గా రాసావు కదా నువ్వు, కలిపే రాసావు రెండు. బుక్ వాల్యూస్, మార్కెట్ వాల్యూ సెపరేట్ రెండు కలిపే. ఏం సార్ రఫ్ నోట్స్ అది క్లాస్ నోట్సేనా ఓకే how many sources percentage of debenture 13% debenture 14% preference share capital equity or equity share capital equity. Now when it comes to specific cost of capitals, don't follow orders. As per order we are writing KE, but understand the sequence of sources we recorded. KD first, KP second, KE third. KD first 0.07, KP 87, equity book values please. 8 lakhs, 2 lakhs, total. Weights please. 0.4, 0.1, 0.5. Product book value product, specific cost of capital into weight of book value 0.028, 0.1487 into 0.1, 0.01487 I think, 0.01487, 0.17 into 0.5, 0.0 total please. 0.12, 12.787%, 79%. Are clear? Now please tell me the market values. Number of shares into number of debentures into market price. How we get number of debenture? Amount of capital divided by face value. Now what about the amount of capital? ₹8 lakh divided by 100 rupees into 110. Now we will get market value for debt. 8.8 lakhs Next, market value of preference shares. 2 lakh divided by 10, 100, 120. What, Nana? Market value of equity. 10 lakh divided by 10 rupees into 22 rupees. How much, Nana? 2 lakhs. 22 lakhs. 22 lakhs only, na? Now total market value. $30. Weight of market value. 0.265. 2.4 divided by 33.2. 0.22 divided by 33.2. 662. Now I want product of market value. How, sir? Specific cost of capital into weight of market value. 0.0185. 0.11. 0.11. 25. 0.01. Submit. One four. 14.16%. The differences of answers came because of decimals. So 1/6 round of value 2. 14.2. Completed. Guys, completed. So some students will consider 20 rupees as a market price. 20 rupees as a market price. No, that is the amount I received. That is the amount I received. Clear na? So if you want market value, you have to multiply with market price only. What is the market price? 22 rupees. Not net amount you received. Clear, sir? But when come to the KE calculation, you have to consider investment value. What is the investment means? Amount you received. Amount you received 20 rupees per share. Clear? Illustration number 21. June 25 attempt question. Wait a minute. Before solving June 25, we wanna solve December 25. Recent attempt. Just see here, December 25 question paper. What about the MCQ number 1? In day 1, I explained difference between profit maximization and wealth maximization. As well, I provided a clarity difference between equity share capital and equity. In ratio analysis, I will give some more clarity. Equity have a multiple names. Equity is also be known as shareholder funds. Equity is also be known as shareholder funds, owner fund, net assets, proprietary fund. This is the alternative names we have. Now, what is the mean for shareholders here? Shareholders wealth means what? Equity. How to calculate equity? Number of shares into. What about the option B? The amount he invested is called capital. Amount he received is called wealth. What he received? Capital amount plus profit share. That is nothing but rate and earnings. Now see, the number of equity shares owned multiplied by current market price per equity share. What you will get? Equity share capital value or equity value. That's why they multiplied with market price. That is the point we're discussing from starting onwards of KO. Sir, clear, sir? 2 marks. MCQ number 8. Atla. Answer please. 12 minus 8. 4 into 1.5 in plus 8. Option B. Another 2 marks. MCQ number 11. Oh, sorry, 9. Tax adjustment is there for KR. Tax adjustment is there for preference shares. Tax adjustment is there for debentures also. But they not provided all of the above. They not provided B, C, D. Now, out of 4 only you have to choose best option. In every calculation, are you considering personal tax? In every calculation, are you considering dividend distribution tax? In every calculation, are you considering company tax? Yes. In every calculation for interest purpose, I am using corporate tax. In every problem is there. Now, based on that, which one is important? Cost of debenture KD. Hope you guys clear? మూడిట్లో వాడతాం నేను కాదనట్లా బట్ ఎక్కువ దేంట్లో వాడుతున్నాం దట్స్ మీన్స్ ట్యాక్స్ అడ్జస్ట్మెంట్ అంటే నీ మైండ్లో రావాల్సింది ఏంటి కేడి స్పెసిఫికేషన్ ఓన్లీ కేఆర్ స్పెసిఫికేషన్ ఓన్లీ కేపీ అన్లెస్ దే స్పెసిఫై ఆర్ నాట్ వాట్ వీఆర్ యూజింగ్ ప్రీ ట్యాక్స్ కేడి ఆర్ పోస్ట్ ట్యాక్స్ కేడి పోస్ట్ ట్యాక్స్ కేడి వాట్ ఇస్ అ పోస్ట్ ట్యాక్స్ 1 minus ట్యాక్స్ ఓన్లీనా ఆప్షన్ డి 6 marks. Any complications? But for this MCQs also lot of students are asking, tell me the answers before exams with taking their risk abilities. You need not to depend on others for MCQs also. Sir, clear sir? Okay, then fine. I said already, question number 4B slot fixed for cost of capital. You felt any complications, tell me, I will explain. Split also not required. Why? Return is not there. Market value also you need not to calculate. They are provided. Just things you have to figure out specific cost of capitals. Now, speed, tell me the KE, KP, KD. Is same as previous problem only, I think. But the only change is market value we have to figure out. In this question, market values they given. Just numbers changes, I think. Why? Because values are same. This point is same equity. Next, when it come to second point. Yeah, easy one. Redeemable or irredeemable? Preference. Irredeemable. Why? Because there is a no n number of years. Point 3. Redeemable debentures. Speed up. Chudam. Your first chapter. Speed up. Let us check. Who will tell first? Pen తో కూడా చేయొచ్చు నా పెన్సిల్తోనే చేయాలి అండి. Are you saving money for your parents? Another 7 marks in your pocket. Total how many marks? 6 plus 7. 13 marks from one chapter. Anyone completed KE? Twelve divided by 148 plus 0.07. 0 point completed. Anyone KP? 11 divided by 116. That's it. Into 100 you will get a percentage. 9.48%. Why? Because irredeemable, na? Irredeemable preference shares. Preference dividend divided by net proceeds or market price. Okay? Anyone KD? 6%. 6.06%. Okay, let us check. So KE T1 divided by P0 minus flotation cost plus growth. What about the T1? 12 rupees. What about the P0? 150. Flotation cost 2 rupees plus growth 0.07. Answer 1510 or 15.1%. Now when it comes to the KP irredeemable, preference dividend divided by net proceeds, that equals to, what about the percentage of preference dividend? 11% on face value, 11 rupees only na. 11 divided by, they're sold at 120. On that they need to pay flotation cost of rupees 4. Now 11 divided by 116 into 100, you will get a percentage 9.48%. Next, KD, redeemable, redeemable and irredeemable. Interest 1 minus tax plus repayment value minus net proceeds divided by n number of years, average of repayment value on net proceeds. Now what's the percentage of interest? 9% on face value, 9 rupees. Tax rate 35%. 1 minus 0.35. Repayment at, the company sells 10 years 500 face value debenture with 9% rate of interest, and underwriting fee is 2% on issue price. Would be incurred on the issue only. Interest is a tax deductible. Now the point you have to understand, they not said the company sell at 100, 10 years rupees 500. They're selling at how much, Nana? Selling price 500 with 9% rate of interest. The underwriting commission 2% on issue price. They sell at 500 means you have to pay commission also 2%. But there is a no discussion of repayment value. You can observe the entire point. There is a no discussion of repayment value. If there is a no discussion of repayment value, but it is a redeemable debentures only, you have to take one assumption for repayment value now. What assumption is the best option? Face value. Now what is the face value? 500. Are you okay, sir? I think this point also we touched in previous problems. If there is no information related to repayment value, the point is a face value we only repaid. Now when it comes to repayment at face value 500 rupees, net proceeds, so 500 into how much percentage of flotation cost? If you remove 98, if you multiply with 98%, you will get net proceeds. How much? 490 divided by a number of years, 11, 10. %9 rate of, okay. $45, yes, exactly. Super, Nana. Your face value is what, Nana? 500, not 100 rupees. Point to be understand. Clear. Now the answer? What about this answer? 45 into 0.65, how much? 29.25 plus what about this 0.17 divided by average? .1. What about the average? 4. 29.25 plus 0.1 divided by 495 into 100. This 1 na? 10 divided by 10, 1 only na? Yeah. 0.0 double 4 or 6.11%. Any complication in exam problem? Yes or no? You have specific cost of capitals. You have market value. divided with capital employed, you will get weights. Weights into specific cost of capital, you will get product. Sum of product is nothing but KVA. Book value point of view, market value point of view. Any complications? Okay, then fine. Come on, check the illustration number 22. 22 21 21. This is June 25 question, paper question. I think here split is required. Yeah, reserves and surplus is nothing but return earnings. The first point you have to check that one only now in question paper. The present capital structure of a company is as follows: equity shares face value 10, capital 240. Can I name this called book values? Now number of shares please. Yeah, 24 lakhs మళ్ళీ దాని క్యాలిక్యులేటర్ వాడుతున్నారు. 240 divided by 10, 24 lakh shares. Reserves and surplus 360 lakhs. What about the market value? Divided by 10 No. Split only we will get market value of reserves and surplus. Next 11% preference shares. Here also face value. Generally we are assuming, if there is no information, we are assuming 100 rupees. But when come to here 10. And also I said don't take assumption your own. Consider the additional information any given related to the preference shares. You can see the preference share market price, current ex dividend equity current ex dividend preference share price 12 rupees. It nearest value of assumption 10 rupees. Guys clear? Okay, then fine. 12% debentures 120 120 lakhs is a capital. I want face value. Check the market price. Current ex interest debenture market value is 102.5 per 100. They said face value also. The face value is 100 rupees, but in market it traded at 102.5. Market price for the purpose of market value calculation. Okay, then fine. Corporate tax, come to the additional information. What about the 14% term loan? 360 lakhs. Number of term loans? Not possible. Number of is possible only for equity shares, preference shares, debentures. Clear, sir? Then fine. Additionally, the following information is available. Equity beta 1.06. Yield on long-term treasury bonds. What about the treasury bonds? This is a point I said at the time of RF. Government security as well as treasury. The word I used, treasury. Treasury bonds. RF. Now when it comes to risk premium, what does it mean for risk premium? RM. Wrong answer. RM minus RF is known as risk premium. You will die. Sir, clear, sir. The RM minus RF equals to, yeah, I can say easily 1.06 into 0.06 plus 0.1. KE completed. Why? Because the difference of RM minus RF is 6%. You have to multiply with beta plus RF. KE completed as per CAPM. ఇది చదివేస్తున్నాను ఉందా ఏంది? ఈజీ, అందుకనే చదివేస్తున్నా. I will solve. Sir, clear, sir? I am not reading the solution. The basic stuff only. Next, when it come to current ex dividend equity share price, all students will fail current ex dividend price. He will not focusing on the price, they will focusing on ex dividend. There is a concept of ex dividend cum dividend in your accounts. If dividend included, that is called cum dividend. If dividend not included, that is called ex dividend. But we are not required for that. What we want means price I want. Sir, clear, sir? Now current ex dividend preference share price is 12 rupees. Next, current ex interest debenture market value is 102.5. Corporate tax rate is 40%. If they will not touch this ex dividend problem, you can solve easily. But if you stuck with this word, you can't solve. You will think more and more and more. Sir, clear, sir? నువ్వు కామ్గా అక్కడ వెళ్ళిపోయావు నువ్వు ఫ్లోలో, అది మార్కెట్ ప్రైస్ అనుకొని పని అయిపోద్ది. లేదు ఏంటి ఎక్స్ డివిడెండ్ అంటే కమ్ డివిడెండ్ అనే కాన్సెప్ట్ ఉందని నువ్వు ఇలా థింక్ చేసుకుంటూ వెళ్ళావు అనుకో, అక్కడ పక్కన పెట్టడమే ప్రాబ్లం. అదే Are you okay? Okay, then fine. The debentures are redeemable after 3 years and interest is paid annually. Ignore flotation cost. Calculate the company's weighted average cost of capital using market value weights. Do you want D1? Do you want D1? Yes or no? Do you want D1? What is the purpose of D1? KE calculation. If they give CAPM, D1 is not required. That's why you need not to worry about the ex-dividend. Are you guys clear? Are you understand the point now? If you want D1, at the time only you have to check dividend related information. D1 is what the purpose? KE calculation. When it comes to the CAPM, KE is equals to RF plus beta into risk premium. Are you okay now? Then fine. So, KE please. $16.36. KP is there, huh? I think KR also is there, I think. What about the KR? When it comes to KR, you have to check two things: flotation cost and personal tax. Flotation cost is there, relating to equity. Personal tax is there, relating to equity. Now what is your assumption? K equals to KR. Yes or no, sir? When K equal to KR, if you split, you will get same answer. If you not split, you will get same answer. But we don't want that. What do you want? We will split. Are you okay, sir? Okay, then fine. What about the KP, ma? There is a no KP related number of years in the entire question. Check. KP related number of years is there. Number of years is there relating to debenture, KD. That means that is a redeemable debenture. There is a no n number of years relating to preference shares, irredeemable. What about the irredeemable calculation? Preference dividend divided by net proceeds. Now what about the preference dividend? How much percentage? Here is there. Sometimes this will be there in question, additional information. Sometimes it will be there in capital structure. 11% on face value, how much? 10 rupees, huh? How much? 1.1, huh? Yeah. Okay, when it come to 1.1, what about the net proceeds, Nana? They're selling at what market price, na? Don't take an assumption of face value. We are selling at face value. They're not mentioned. That's why there is only information market price. What value you sold means market price only. But in previous problem, market price is there, sale related information is there. That's why I consider sale related information, not in question paper 20 problem. Sir, clear, sir? Are you confusing in points, sir? No. Based on information only, we are considering the investment value. Okay, then fine. What about the answer? 9.17%. When it comes to KD, redeemable or irredeemable? Redeemable, 3 years is there. Interest 1 minus tax plus repayment value minus net proceeds or market price? Market price. Why? Because net proceeds information is not there in the question paper. Market price divided by. Sir, when we are taking assumption means if there is a no market price, there is a no net proceeds. At the time only we are taking assumption. If there is a information, we will follow that information, either net proceed information or market price information. Now when it comes to n number of years, whole divided by average of repayment value and market price. Now what about the interest rate? 12% on face value. What about the face value? 100. Now 12 rupees. Tax rate 40% means can I take net 0.6? Repayment at there is a no clue. There is a no clue related to the repayment. You have to take assumption. You are repaying at face value. How much, Nana? 100 of face value minus market price, Nana. 1 or 2 point. 5 divided by 3 whole divided by 100 plus 102.3 102.5 divided by 2. Twelve into 0.6. What Anna? 7? 2. Here some student will do mistake. 100 minus 102.5, you will get an answer of minus. Don't add. You have to reduce. Now please tell me the average. 100 minus 102.5 divided by 3. Minus 0.83 divided by average. 1.25. 7.2 minus 0.083 divided by 102.25 into 100. 6.29. 6.29%. Any complications, sir? Any complications? But split is we are doing. If you not splitted, also no problem. But if you show entire KO, book value KO, market value KO in one single format, split is important. Not Nana, wrong answer. This is 0. Not 0.083, it's 0.83. సరేరా స్వామి, తప్పులు జరుగుతుంటే 0.83. Okay. Okay? Clear na? So tomorrow I will check this presentation in our notes. You can calculate in single format to both KOs, or you can calculate in individual formats, also not a problem. Are you okay? So this working notes also I need as per exam standard. So don't use direct calculation part. I equals to interest, that equal to percentage on face value, that equals to 12% of 100 equal to 12 rupees. That kind of detailed calculation I want. Okay, then fine. 22, 23, 2 problems is pending. This newly added in workbook, I think 23, but 22 is same as it's an easy problem only. It's also multiple times asked in exam. 23, 22 problem. Somewhat different model. Why? Because for this 22, you have to figure out capital structure. Point do we understand? In every problem, capital structure they provided. For this problem, you have to figure out capital structure. They will give capital, total capital. They will give some 100 lakh rupees. Out of 100 lakhs, this is the retained earnings. This much is equity, this much is debt. 75% equity, 25% debt. First, you have to segregate that. 75 lakhs equity, 25 lakhs debt. Out of that, the company already have 10 lakhs. It means out of 75 lakh rupees, 10 lakhs is retained earnings, 65 lakhs is equity share capital. Up to 5 lakhs, 14% interest, behind that 15% interest. For debt related, up to 5 lakhs, 12% interest, behind that 15% interest. How much amount you have? 25 lakhs. 25% of 100 lakhs means 25 lakhs debt na. Out of 25 lakhs, 5 lakhs debt 1 at the rate of 12%. Remaining all are debt to 15%. Capital structure ready? Yes or no, sir? So that is the only point you have to learn in 22. Capital structure also you have to create. Let us check this one. ABC Limited wishes to raise additional finance of rupees 20 lakh for meeting its investment plan. The company has rupees 4 lakh in the form of retained earnings available for the investment purpose. The following are the further details. Debt equity ratio 25% is to 75. What does it mean for 25 is to 75? If I procure 1 rupee, on that 0.25 is debt, 0.75 is equity. Now how much I am procuring? 1 rupee or 20 lakhs? 20 lakhs I am procuring. Yes or no, sir? Understanding purpose, I said 1 rupee, man. How much I procuring? Out of 25 lakhs, out of 20 lakhs, 25% is debt. 75% is equity. How much? How much? 5 lakhs? 15 lakhs. Okay, then fine. What is the 5 lakhs? Debt. What about the 15 lakh? 15 or 11 lakh? 15 lakhs. Now they are saying that company already have a 4 lakhs of retained earnings. It means out of 15 lakhs, 4 lakh is retained earnings. What about the pending? 11 lakh. That is called equity share capital. Are you guys clear now? Next, you can observe the point B. Cost of debt at a rate of 10% before up to 2 lakhs, 13% behind that. How much the debt amount you have? 5 lakhs. Out of 5 lakhs, 2 lakh is debt one at the rate of 10%. What about the pending value? Phone పగిలిపోతాడు వస్తే. బెడ్రూమ్ అనుకుంటున్నాం ఏంటి? So when it come to debt amount is how much? 5 lakhs. Out of 5 lakhs, they saying that up to 2 lakhs, 10% rate carrying. Behind that, every 1 rupee, 12%, 13% rate carrying. Okay, then tell me, out of 5 lakhs, up to 2 lakhs, debt 1, 10%. Behind that means pending 3 lakhs. Capital structure completed. You can see the equity share capital 11 lakhs, retained earnings 4 lakhs, 10% debt 2 lakhs, 13% debt. This structure also you have to create. Sir, clear, sir? Now structure is there. You have to figure out KE, you have to figure out KR, you have to figure out KD1. 2 dates is there. KD1. It's not a KD, KD. It's a KD1, KD2. You have to figure out KD2. Sir, clear, sir? Then you can easily figure out what, Nana? KO. This is a concept name is called marginal weighted average cost of capital. Marginal weighted average cost of capital. The word marginal represent additional or extra. The word marginal represent additional or extra. The same kind of problem we solved previously, that is called revised KO. That is called revised KO. What happened? Company already have 10 lakhs. Company procured 5 lakhs extra. Sir, clear, sir? But when come to this problem, company need additional extra 20 lakhs. Additional 20 lakhs. For that 20 lakhs, how much is the KO? But on revised KO, what we calculated for 15 lakhs, how much is the KO? The point calculation adi. So revised KO is different, marginal KO is different. The only problem we have based on marginal cost of capital. Sir, clear, sir? So tomorrow I will give presentation for illustration number 21 as well as 22 and 23. Tomorrow we want to wrap this cost of capital. I will explain MCQs for remaining time. Are you okay, sir? Okay, thank you.